Welcome to Simple Investing Secrets. In today's video, we'll review 7 of the best stocks to buy now with $1,000. So before we start, please like this video and subscribe to our channel for weekly updates. Let's get started. If you have an extra $1,000 sitting in a savings or checking account, one of the best ways to earn a return on that money is to invest in the stock market. If you're new to investing, buying a low-cost, diversified S&P 500 exchange-traded fund, such as the SPDR S&P 500 ETF Trust, is a relatively low-risk place to start. If you'd rather begin building your own stock portfolio from scratch, here are 7 of the best blue-chip stocks to buy that have buy ratings from the Bank of America analyst team. Number 7. Microsoft Corporation, ticker, MSFT. Microsoft is the biggest software company in the world. Its Windows operating system, Office Professional Software Suite and Azure Cloud Services business are all well known. There's little doubt that Microsoft will have a tough fiscal 2023. Sales in the second quarter period rose just 2% as strong demand for its cloud services was offset by slumping sales in areas like PC and video game software. The tech giant is going through some major growth hangovers in these areas, which saw huge gains in earlier phases of the pandemic. Yet Microsoft's financial strength is even more impressive in the context of this cyclical slowdown. The company generated $20.4 billion of operating income on $52.7 billion of revenue in Q2. That 39% profit margin puts it among the most profitable large companies on the market. Microsoft was also able to send $10 billion of cash to shareholders through stock buybacks and a rising dividend in Q2. This flow of cash should cushion investors' returns while they hold this diverse growth stock through the industry ups and downs. Analyst Brad Sills says Microsoft is positioned to resume double-digit revenue growth in the next 3 to 5 years after its year-over-year growth slowed to just 1.9% in its fiscal year 2023 second quarter. Sills says that the continued use of Azure cloud infrastructure and Office 365 will help Microsoft grow, and he expects that margins will grow steadily over time. Bank of America has a buy rating and a $300 price target for MSFT stock, which closed at $251.11 on March 2, 2023. Number 6. Alphabet Incorporated, ticker, GOOG and GOOGL. Alphabet is one of the world's largest online search and advertising companies and is the parent company of Google and YouTube. Alphabet's strengths, and there are plenty of them, haven't evaporated with the surging interest in generative artificial intelligence, AI. Many factors that helped the stock deliver a gain of more than 350% over the last 10 years remain firmly in place. Analyst Justin Post says Alphabet's fourth quarter numbers were soft, and competitor Microsoft's ChatGPT artificial intelligence investment has grabbed a lot of headlines in recent months. But Alphabet has been investing in AI for years, and it will likely be a long-term AI technology winner, Post says. In the near term, Alphabet is taking steps to manage costs and return excess cash flow to investors via buybacks. Bank of America has a buy rating and a $125 price target for Google stock, which closed at $92 on March 2, 2023. Number 5. Amazon.com Incorporated, ticker, AMZN. Amazon is the market leader in e-commerce and cloud services. Post says the company's fourth quarter performance was better than its headline numbers suggested because of one-time charges. In the third quarter, however, Amazon Web Services revenue growth slowed by 7%, and Post says that the cloud computing subsidiary is very vulnerable to slowdowns in spending in the tech sector as a whole. He projects AWS revenue growth will slow to just 11% in 2023 but says the long-term bull thesis on cloud services is bent and not broken. Meanwhile, Amazon continues to gain retail sector market share. Bank of America has a buy rating and a $135 price target for AMZN stock, which closed at $92.13 on March 2, 2023. Number 4. Nvidia Corporation, ticker, NVDA. Nvidia designs and sells high-end graphics and video processing chips used for desktop and gaming computers, workstations, advanced servers, and supercomputers. There is a lot to like about Nvidia. It's the world's leading discrete GPU company. Discrete GPUs are separate from a computer's central processing unit, CPU, and have dedicated memory. This means they can handle higher workloads, making them suitable for gaming, blockchain, artificial intelligence, and other computing-intense applications. The recent run in the stock has sent Nvidia's valuation upward. It now trades at a forward price-to-earnings ratio, PE, of 53, an 18% premium to its average PE over the past decade. A fourth quarter earnings beat has Nvidia shares up 59.5% this year through March 2, 2023, the best performance of any stock on this list. Analyst Vivek Arya says there are plenty of things to like about Nvidia as an investment, including its solid balance sheet, its capital returns, and its exposure to large, high-growth markets such as AI, cloud computing, next-generation autos, and online gaming. Bank of America has a buy rating and a $275 price target for NVDA stock, which closed at $233.14 on March 2, 2023. Number 3. United Health Group Incorporated, ticker, UNH. United Health is the largest U.S. managed healthcare firm, providing health plans and healthcare services to a wide range of customers. United Health's shares are down 9.9% this year as of March 2, 2023, making it the worst performing stock on this list. Having adequate healthcare coverage is an ongoing need, and demand is likely going to rise, not fall over the years. A big part of the reason for that is that there will be more seniors. According to projections from the U.S. Census Bureau, by 2060, there will be 94.7 million Americans who are 65 years of age or older, accounting for 23% of the population. Analyst Kevin Fishbeck says managed care organizations are particularly attractive investments during periods of macroeconomic uncertainty because they are immune to the negative effects of inflation, rising interest rates, and a tight labor market. Fishbeck says United Health's Optum business is a unique growth opportunity. Bank of America has a buy rating and a $650 price target for UNH stock, which closed at $477.70 on March 2, 2023. Number 2. Exxon Mobil Corporation, ticker, XOM. Exxon Mobil is the largest publicly traded U.S. integrated oil company. The oil and gas industry was one of the few stock market bright spots in 2022, and analyst Doug Leggate says Exxon's capacity for growth sets it apart. Leggate says the company's goal of doubling 2019 free cash flow by 2027 is achievable and calls Exxon Mobil the only meaningful growth story of the global oil majors. Exxon's balance sheet has near zero net debt, and Leggate projects at least $40 billion in 2023 free cash flow. Bank of America has a buy rating and a $140 price target for XOM stock, which closed at $111.40 on March 2. Number 1. Visa Incorporated, ticker, V. Visa is the world's biggest credit card company and owns the biggest electronic payment network. Analyst Jason Kupferberg says Visa's business model is recession resistant, and it is exposed to the secular shift from cash and check payments to digital and card payments. In addition, he says the stock is reasonably valued at about 23 times forward earnings estimates. Visa has a strong track record of execution and a massive addressable market. In the near term, Kupferberg says a recovery in cross-border payments could be a growth driver. Bank of America has a buy rating and a $260 price target for V stock, which closed at $219.06 on March 2, 2023. This concludes our list of the 7 best stocks to buy now with $1,000. As always, it is essential to do your due diligence before committing your hard-earned cash to buy stocks or invest in the market. Remember to like this video and subscribe to our channel for weekly updates on the best stocks to buy and cutting-edge investment strategies for building wealth. Thanks for watching, and best of luck with your investments.